Hey, ChatGPT, write me a real estate ad for a 3-bedroom, 2-bathroom bungalow in Niagara Falls, Ontario, with a fenced yard and new kitchen. Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Here once again to give you my honest and professional opinion regarding the 2023 Canadian housing market. So I'm sure you've heard about ChatGPT, the AI that tells you what you want and writes your essays for you and whatnot. Well, supposedly real estate agents now can't live without this new service or this new AI bot that answers your questions and writes your real estate descriptions. So I guess these agents, whoever they are, it helps them write their ads and their descriptions. They're claiming, this would take them over an hour to write a description for a house for sale, and they can't imagine living without it. So you heard my input, and of course, now here's my results. Looking for a bungalow to call home? Look no further than this 3-bedroom, 2-bathroom home with a brand new kitchen. The property is situated in the desirable Northwood area of Niagara Falls and comes complete with a fenced yard and private driveway. You'll love spending your evenings enjoying the peace and quiet of this property, while the new kitchen comes equipped with all the amenities you'll need to cook up a storm. Schedule your tour today to see this. So it's not a bad description, especially for someone that struggles writing descriptions. For myself, it takes me 10, 15 minutes to write a description, maybe less. So it's not something that I would rave about or want to use. But I guess if I was stuck and I was feeling unimaginable, maybe I would do it. But I think I'm going to stick to my old methods and write my own descriptions for now. I'm going to get into the Bank of Canada's announcement last week and just some comments they made and kind of the press release, some things they talked about with regards to real estate when they, increased the rate by 0.25%, and just kind of my takeaway from the press conference after that announcement. First, I just want to do a quick comparison. I want to compare our land prices. So I've gone on about land prices in Canada and especially in Ontario. So I just want to bring up here, this is the average land sale under half an acre in my region, the Niagara region, for 2022 up until now to the end of January 2023. So just over a year of data. There hasn't been that many sales, 72 sales, again, all under half an acre. And the average price was just under 400,000 there. You'll see 399, $432. So again, pretty insane, the price of homes, or the price of land, I should say. Of course, when you want to put a home on that drastically drives up their price. And this is why things are so expensive. Now, again, my opinion, land is still way overpriced. It still has to come down a lot. So to compare that, in the States, in Florida, which we have a lot of people go to Florida from Ontario, a lot of older people, retirees and whatnot. It's kind of like our little getaway in the winter, right? So for $25,000 less than the average parcel of land in Niagara, you can get a whole brand new house. Here it is, like 1,500 square feet, 3 bedrooms, 2-bathroom, brand new construction in Florida. It's not that far from Orlando. This is not like, again, in the middle of nowhere. It's in a decent area from what I know. 375,000 Canadian. Or you can come to Canada or Ontario and Niagara and you can get a piece of land. Here's a piece of land here, just a random one from MLS, 340,000. This is a 40-foot wide lot. I don't think you could even fit that home in Florida on this lot because it's a bungalow and they take up a good amount of space. Again, this is not in prime location. This is below average, this lot. So for the same price as a piece of land in our barren tundra, Arctic tundra here in Canada, you can get a whole brand new house in Florida. So, when you say, okay, well, you can't build them that cheap. Well, they can build them that cheap in Florida for some reason. So I just wanted to point that out. Now let's move on to the Bank of Canada and what they had to say last week and the takeaways from that. So, of course, we know they raised 25 basis points, or 0.25% to 4.5%, and they're saying quantitative tightening continues. So Reuters kind of sums this up. It's on the Yahoo Finance, but it's a Reuters article. They kind of sum this up, what Tiff Macklem had to say and the key points. So let's go over those and see where he stands and kind of his frame of mind. Macklem on possibility of mild recession. I guess the way I would put it, as with a projection of roughly zero growth for 2 to 3 quarters, what that means, it's just as likely that we'll have 2 or 3 quarters of slightly negative growth, slightly positive growth. So yes, it could be a mild recession. It's not a major contraction. So some reassurance there from Tiff that, yeah, things are going to slow down. We're going to have a mild recession. Don't be alarmed. It's not going to be a crash. Well, so he thinks. Macklem on the possibility of rate cuts. It is really far too early to be talking about cuts. The pause is really designed to give us time to assess if we have raised interest rates enough to get inflation all the way back down to target. So, yeah, there you have it. This is not the reverse cycle coming. This is just a pause, like he said, and we'll monitor. And future increases aren't out of the question either as they monitor inflation, right? Now I want to move on to what did the Bank of Canada have to say about real estate and some other comments from other industry leaders to see what they have to say. I think CIBC was one, and of course, Royal LePage and some mortgage broker. This was reported from the Globe and Mail on January 25th. The pullback in housing activity that began in 2022 is expected to continue over the near term, the central bank said in the monetary policy report that accompanied the decision to hike the overnight lending rate by 25 basis points to 4.5%. House prices are projected to decline further, particularly in markets that saw significant increases during the pandemic, the report said. So, of course, we all know that. The bigger the gains, the bigger the losses. Those areas include Toronto suburbs, smaller Ontario cities, and the Chilliwack region of BC, where home prices jumped more than 50% over the first 2 years of the pandemic, when the central bank's overnight rate was near zero. Home prices in some of those markets have fallen more than 20% over the past 10 months. And of course, if you watched last week's video, you would have seen those areas mostly in Ontario, Chilliwack, Fraser Valley, and BC were the other areas. So pretty much what we already know, but it's coming right from the horse's mouth here. The pullback will continue in the first couple of quarters of this year, the bank's senior deputy governor, Carolyn Rogers, said at a news conference. She said it was important to remember that some of these markets have come down from extreme highs. So I would say many of the markets in Ontario and BC have come from extreme highs, and other places have come off of highs too, all-time highs. So yeah, pretty accurate statement, I could say, that the deputy minister, deputy governor said there. We might see some increased distressed sales, so therefore we might see additional downward pressure on prices before things stabilize later in the year, said Benjamin Tal, deputy chief economist with the Canadian Imperial Bank of Commerce. And of course, he would have the inside information or the inside knowledge on this. And he's probably already seeing a lot of things that, of course, they haven't told us. But interesting statement from one of the major banks there. Now on to a couple of comments from people in the real estate industry and mortgage industry to see what they have to say. The real estate industry is also expecting the market to stabilize, especially after the central bank said it could hold rates steady in the future. It's more like the real estate industry is hoping, praying that the market stabilizes. I believe it would be a sign of confidence, said Phil Soper, president of the national real estate brokerage Royal LePage. Mr. Soper does not expect a rush of activity, but said a large number of would-be homebuyers and sellers have been waiting for a sign that this era of pricing volatility will end. So yeah, hoping and waiting, whether it's the buyers, sellers, real estate agents, whoever, they're hoping for a quick end to this. I don't think it's going to end this year, but anyway, they're hoping for a sign of confidence, as Phil Soper says. Tracy Valco, a mortgage broker who has worked in Southern Ontario for 26 years, echoed Mr. Soper, saying she believes a pause in interest rates will encourage buyers and sellers back into the market. The worst is over, she said. Okay, so did rates go down or something? Did I miss something? The worst is over. The worst is still yet to come because the rates haven't really taken full effect yet. I guess these guys are wishful thinking. It's going to be a while before, again, these rates take hold, and we haven't even entered the recession yet. So I don't think the worst is over. But anyway, they'd like to believe that, and that's their opinion. That's great. I obviously don't believe that. I think the worst is still yet to come. And this year, we're not going to see very much of any growth at all. Probably going to be downward spiral or slide, whatever you want to call it, for the rest of the year. Let me know your thoughts in the comments on what I discussed today, whether it's the ChatGPT AI or the Bank of Canada and these professionals' opinions here. Anyway, thanks for watching. And until next week, I'll see you then.